If you are like me, a little reprieve from the markets at midweek is kind of refreshing. I would also point out that today was one of those rare days when I understood exactly what the markets did and exactly why the markets are closed, but AgriTalk is live and open for business. Live from Nobody Else Is at Work Today Day via Farm Journal Studios, this is AgriTalk. This afternoon, it's wall-to-wall Bubba. Todd Bubba Horwitz from BubbaTrading.com, and I will chat it up on the matters that matter to you. I'm outstanding conversationalist and professional broadcaster Davis Michaelsen. Welcome to AgriTalk, everybody. So glad you decided to take some time and listen in today, either on your favorite ag radio station or your preferred digital device. AgriTalk, we're live right now. Now, Chip is in transit. We spoke yesterday, and I offered it up and said, bro, if I said I'll handle the shows tomorrow, which is today, what would you do? He was going to go fishing in Louisiana. But I know for a fact that he had a thing going in Oklahoma. I don't know how he's going to swing this, but he'll be back tomorrow live, and we'll get to the bottom of it then. In the meantime, a great conversation with Bubba this afternoon is about to happen. I mean, I was talking to him just a little bit before the show. My man, as usual, is fired up. He's got things that he wants to say, and I want to hear it. I really do. I want to talk. Okay, one of the things we got to talk about is this Saudis and the petrodollar. Okay, I want to talk about the jobs report because something is a little bit off. You see the ads for help wanted, but something just doesn't quite add up. We'll talk to Bubba about that. We got to talk about the dollar. Maybe we can, I don't know if he's been watching the EU election results. We got a Bank of America survey here, says investors will continue to pour into U.S. equities. I've heard the opposite case made as well for a 30, perhaps 40% downside correction in the stocks. We'll see what Bubba makes of it. And then we'll just see where the conversation goes. Of course, I do want to pick his brain a little bit on how you, beloved farmers, should be thinking about your marketing. Is there something to do? Is there nothing to do? Sometimes that is the legit choice, is just to wait and do nothing. So we will make sure and walk through all of that. But since the markets are closed today, everything is closed today, we're going to get just a little bit outside the circle and just add a little bit more color to some of these issues. And hopefully it'll give you something to think about by the time we're all finished. We're never going to get to finished if I don't start with the news here. USDA said 27% of the U.S. winter wheat crop was harvested as of June 16. That's 13 points ahead of the 5-year average pace. The quick harvest ramped up harvest hedge pressure in wheat futures Monday and follow-through selling weighed on the market again yesterday. July soft red winter wheat futures led the drop in wheat futures yesterday. Front-month SRW posted a high-range open and closed near session lows and at the lowest level since April 19. Wheat bears are targeting support at the April 18 low of 550. Spring wheat crop conditions of 76% good to excellent as of June 16 were up 4 points from the previous week. On yesterday's close, July HRW wheat futures were 4 3/4 cents lower at $6.75. July SRW wheat down 9 1/2 cents to 5.82. July spring wheat closed at 6.32 3/4, down 5 3/4 cents. Watching those wheat crop conditions, Chip was highlighting the poor to very poor, which really doesn't give us a whole lot to be afraid of. Okay, all right. There are spots, of course, but I agree. We do need to keep an eye on that poor to very poor as much as the good to excellent categories on crop conditions. December corn futures got back most of what was lost Monday and posted an inside trading day with the low range open and a high range close yesterday. Slight deterioration in the U.S. corn crop gets some of the credit for Tuesday's short covering. USDA rates 72% of the crop in good to excellent condition, down 2 points from the previous week. Traders also pointed to good demand for U.S. corn in the export and ethanol markets. The weather forecast is a mixed bag with some stress potentially developing in the eastern corn belt. July corn futures today 6 1/4 cents higher at $4.50 even. September corn up 5 3/4 to $4.55 3/4. December corn futures closed at 4.67 3/4, up 4 3/4 cents. USDA says 70% of the U.S. bean crop is in good to excellent condition. That's down 2 points from the previous week, but did very little to support new crop bean prices yesterday. Old crop beans found more support from uncertainty about Brazil's export tax scheme and from reports that lawmakers are urging EPA to increase bio-based diesel mandates for 2026. November soybean futures opened a slightly lower and spiked support at Monday's low. Prices rallied to moderately higher levels yesterday and then fell back to close low range, but above the opening range. July soybean futures were 16 1/4 cents higher at 11.74. August beans up a dime to 11.56. November beans closed at 11.32. That's up 1 3/4 cents on the day. December cotton today was 99 points higher. December cotton yesterday was 99 points higher at 72.76. On your livestocks, live cattle futures inched to the downside again yesterday, even with the boxed beef market higher on strong morning movement. Traders generally expect the cash market to ease from last week's all-time high. August fat cattle today were 70 cents lower at 182.10. August feeders down $1.37 1/2 to 259.95. And on the snout side, June lean hogs today $1.60 lower. June lean hogs yesterday $1.60 lower, 93.77 1/2. October hogs up 17 1/2 to 78.40. Again, markets were closed today, and it's even got your beloved newsman a little bit twisted up. Let's bring in Bubba. Todd, good afternoon, buddy. We appreciate you spending some time with us. This is the time when you would normally talk about what's going on in the markets here. How you doing?
I want to know who's the more handsome, you or me?
I don't know that we have a way to measure that, because I feel like you and I have set the bar so high, for masculinity, for handsomeness, for personal style, even. That's an element. I don't know if we can measure. We don't have the technology, Bubba.
Okay, I'll let that go. But I do want to ask the audience a question, okay? Just so they can think about it while we're talking, and maybe somebody will respond.
Yeah.
But I want to know if anybody out there has been approached to sell their farmland and to sell it for maybe more than it may be worth today. Because, I have a theory, right? I've given you that theory in the past. Mm-hmm. And I want to see if my theory is correct, because I believe it to be correct. And I have a lot of concerns about it, but I would like to hear from those on the combine, those that are listening. I'd like to know if anybody has approached you to sell your farmland. Okay, can I do that?
Absolutely, you can. We would love it if you would call in. I haven't even said the phone number in so long. 855-4-TALK-AG. That's 855-4-TALK-AG. We've got Sam back in the booth.
Is that 855-4-TALK-AG?
855-4-TALK-AG. Yeah, that's the one. We've got Sam in the booth there. He'll pick up the phone and either relay your response, or heck, we can get you on the air too. I mean, we might as well, right, Bubs?
I would love to hear, because I have a theory, and I'm very upset with what's going on in this country. I'm very upset with things that I'm watching. I'm very upset for farmers, because the farmers and producers are getting the triple whammy, because their inputs continue to rise, their output continues to fall, and of course their legislation and the things that are not favoring them by the way
that it's already started. We'll be back with Bubba. The truth is hard to come by these days, unless you listen to AgriTalk. And you are listening to AgriTalk. In fact, right now we are live on this Wednesday afternoon. Todd Bubba Horwitz from BubbaTrading.com is my guest today. 855-4-TALK-AG. 855-4-TALK-AG. Bubba, come on back in here, because we did get a call from Central Nebraska just that fast. We were not into the break that far when we did get a phone call from Central Nebraska. Help us with what you're talking about. I have no idea what you're even talking about, bro. Lay it out here for us, please.
Well, we all have heard in the past about the Chinese 100-year plan to basically take over the world, right? Have you heard about that?
Yep.
Okay. So I keep watching the grain markets. I keep watching, and I'm watching Bill Gates accumulate. Bill Gates is the largest individual owner of farmland in the world. Okay. And I'm watching what's going on. And of course, we have all this illegal immigration, and there's a lot of Chinese that are coming in illegally through the borders, through the southern border. And I have a theory that China is trying to keep the prices down in grains to force farmers out of business, to force them to sell their land, because that is basically, if you're a farmer, your entire life savings is basically the land that you own.
Mm-hmm.
Correct?
Mm-hmm. Yep. That's
so
fair.
I am under the impression that the Chinese are trying to force the prices so low that farmers will be forced to liquidate their land, and they will liquidate it to the Chinese. We already know that the largest pork producer in the world is who? Oh, it's Smithfield Foods, which is owned by who? Oh, the Chinese. Okay.
Mm-hmm.
So we know one thing for sure. Whoever controls the food supply controls the world. So that is my theory. I could be wrong, but
and we do know, and this has been a story for quite a while, China, there were reports that their soil was contaminated with cadmium and other sorts of carcinogens and things like that. And then we get the stories out just a few years later. Hey, China's going to try and, they're making moves. They're keeping more urea at home. They're trying to grow more domestic food products there. Maybe it's not working out. I don't know.
I don't know either, but I do know that the actual, if you look at the history of markets and you look at what's going on in the grain markets, the population continues to grow, yet the demand or the pricing on grains continue to fall. Okay. And it's been unbelievably ugly overall if you're a grain farmer, because prices I don't know the exact number, and certainly I'm sure you may know, or somebody out there knows, but if you're in the prime area of soil and the prime area of growing, your inputs are obviously a little bit lower. But if you're a guy farming out in the Dakotas or in Minneapolis or wherever, you are not getting the same yield that they are getting, let's say in Indiana or Iowa or Illinois.
Sure. Yeah.
So the input cost has got to be killing those farmers that don't have massive production.
Mm-hmm. Mm-hmm. Well, I guess the other side of that, and maybe this goes back to where you started, which is China is not afraid to slow walk their plans, to make a glorious 100-year plan and just work it a little bit at a time, baby steps here. But if they've got Brazilian production to rely on, I mean, until they run out, sure, they can give us the cold shoulder, but eventually aren't they going to have to come back to the U.S. for some imports? Well, who knows what? Maybe sorghum,
But they have to, but they can hold, they can continue to be sellers while they're being buyers. There's ways to do things in the market structure to keep the weight down on the product and actually rise the cost of production, which then again, really what we're seeing, Davis, is the destruction of the free market system, where the markets decide, where the actual price discovery decides what things should be priced at. And it makes me sad to watch the destruction of where our money goes, all the money that's going to Ukraine, the cold shoulder to Israel, the way that things are going. And that the squad, for example, they're trying to get into what we call globalism, which is to really destroy the worldwide middle class and go back to a two-party or a two-class system, which is the wealthy and the poor. Okay. And that concerns me. Now, again, for me personally, listen, I'm old. It will not have an effect on me personally, but it will affect my children. It will affect my grandchildren. It'll affect your children. And I'm very concerned about that, because certainly I would love to see the country and the United States of America, which could be totally freestanding. We do not need anybody. If we want to stand alone as an island, the only thing we are missing in the United States is some of the rare earth materials. And certainly, since we have some of the smartest scientists and the smartest engineers in the world, I'm sure we could figure out a way around that. And I'm getting very nervous when I watch the outflow going to other countries other than the United States, because this is our home and this is our place. And we no longer truly have either freedom, which goes back to the Patriot Act after 9/11, and we don't have the free speech, and we're seeing our stuff being totally destroyed piece at a time. And to me, it looks like now they're going after the farmers. And if you ever heard the name of Martin Niemöller, it's a poem that was written, and it's in various versions, but it was first they came for the trade unionists. I wasn't a trade unionist, so I did nothing. Then they came for the Protestants. I wasn't a Protestant, so I did nothing. The long and the short of this, Davis, is that when they finally come for you, there'll be nobody left to help protect you. And that concerns me as an American.
Yeah, that is concerning. Well, the journalists go first. Let's not forget the journalists. That's me. That's me, baby. That's your old pal.
But at least you're a fair journalist. Again, unfortunately, when you go back in history and you go back to, Walter Cronkite and Huntley and Brinkley, they reported the news. They didn't report their opinion on what the news was or what they wanted you to think. They weren't brainwashing Americans. Today, if you sit on one side of the aisle, you look at these channels. If you sit on the other side of the aisle, you watch these channels. Right. And I think that is a sad state of affairs that we only give Americans two choices. Like we know, listen, I'm not going to talk politics, but RFK is running, right?
Yeah.
Now, he can't get on all 50 states because of the regulations. So they've really destructed, and you have the fighting between the Republicans and the Democrats, okay, which both sides are criminals as far as I'm concerned, but that's another story. But the third party cannot get on all 50 states. It's very difficult. And it's kind of like Coke and Pepsi, okay? Yeah. You get a choice of Coke or you get a choice of Pepsi, because they both advertise for each other even when they're bashing one another, but you don't get no RC Cola, and that bothers me.
Huh. That is very interesting. I did not know that a third-party candidate would struggle to show up on the ballot in all 50 states. It does seems like there's an imbalance there.
You need something like 125,000 legitimate signatures in each state. And I know how hard it is to get that done.
Each state. Wow. Yeah. I'm not sure there are that many people in Nebraska, are there? I'm sorry, Nebraska. I love you. No,
I love Nebraska. And if my buddy John, the poker player, is listening, I'm saying hello, and I'm going to kick your ass next time I see you in the poker room.
I believe you will too. Hey, now, and I wonder about this sort of Chinese thing and who's watching out for us. We're in this country and throughout Europe. There's been a move away from common sense. Some people call it a woke movement. Lots of different terms for it. I have a few choice words for it myself. It seems like, it's been big news. The European Union has voted out a lot of the liberal parties. And I feel like maybe it started clear in Argentina with Milei. And then we got Mexico, electing a woman president. Things might be shifting though, dude. Do you think?
I agree, and I think we will truly find out in November here. But certainly, people around the globe are getting sick and tired of putting their hard-earned money in to support those who don't want to work, those who want to sit on their couch and eat bonbons and not do what it takes to be successful. The United States, we were built by capitalists. We were built by farmers. Okay. The country never ran better than when the farmers were in office and when they were running their farms. Of course, obviously, technology has changed a lot of the world, and I get that part. But we do not have strong leadership that is really in the favor of the middle class and the average person. And to me, that is a shame, and they should be slapped in the head for treating the average person like they do.
855-482-5524. Call us on AgriTalk and talk to Bubba. Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 4 3/4 cents lower at $6.75 yesterday. July SRW wheat yesterday down 9.5 cents to $5.82. Remember, the markets are closed today. July corn futures 6 1/4 cents higher at $4.50. December corn futures closed at $4.67 3/4. That's up 4 3/4 cents. Yesterday, July beans were 16 1/4 cents higher at $11.74. November beans closed at $11.32. That's up 1 3/4 cents. December cotton today 99 points higher, $72.76. There's that today again. It was yesterday. August fat cattle 70 cents lower, $182.10. August feeders off about 37 1/2 to $259.95. And July lean hogs yesterday $1.60 lower, 93.77 1/2. Get more. Go to tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Do you suffer from talking on the radio phobia? No problem. Send us a tweet at #AgriTalk. And thanks for tuning in today to AgriTalk, everyone. We do appreciate your time. I'm your pal, Davis Michaelsen, here behind the big green leafy microphone. Chip and Big Apple Joe are en route, so it's up to me and Sam to keep her out of the rhubarb, and we brought along Todd Bubba Horwitz from BubbaTrading.com. Todd, it's been a great conversation so far. The phone lines lit up during the break, baby. Nice work.
You got to do what you got to do, baby. You got to get it going. And by the way,
yeah,
just, markets were open today, not the ag markets, but the equities were open and the financial markets were open till noon Central Time. Because they trade electronically. And I don't think we're that far away from having 24/7 trading forever. Okay.
Whoa.
You're
going to drop a bomb like that.
Well, you can kind of see it happening. I've been doing this. This is my 45th year as a trader. Okay. And when I first started trading, obviously markets were open 8:30 to 3:00 Central Time. The grains opened at 9:30. The bonds opened at 7:00. And of course, then they made some changes and they went to more electronic stuff. So they eliminated the floors, they eliminated the market makers. And if you're watching, for example, in the cryptocurrency world, they do trade 24 hours a day, 7 days a week. Mm-hmm. Okay. And I don't think we're that far away because, of course, the greed of the exchanges, because when they went from profit to non-profit, now opens the door, because if everything's electronic, nobody's got to get up to be there. And of course, we are global markets now, which is why the markets were open electronically today to facilitate London. So that's what I would suspect in markets, including grains and agriculture and everything else.
Yeah, yeah. Well said. That's an interesting thought. Sam, do we still have Luke on the line? Hello, Luke. Oh, we got Luke. But Luke wanted you to talk about cotton just a little bit. Do you mind talking a little cotton for us? Can you take us there?
I don't mind talking cotton at all.
Yeah, how do you like it?
I think cotton is probably a pretty good buy down around this 70-cent level here. It had obviously a big run. We came up from around 49 cents back a couple of years ago. Had a big run and it got well over $1, and then suddenly the bottom fell out, and I really thought, and I'll give full disclosure, I really thought that when they hit around 78, 79 cents, I thought that was a pretty good area to look at. And then suddenly the bottom continued to fall. But remember, we were up as high as about $1.60 back in 22. Okay. And I think now this could be part of the same issue that I'm talking about the Chinese, but at the end of the day, to me, we look like we're trying to find a bottom and searching here around 70 cents. I would much rather be a buyer than a seller. And I have been a buyer. I have been nibbling at buying some corn down here. It certainly looks ugly, but again, markets, when they look their worst, are usually the time to buy, because they've cleaned out all of the sellers who wanted to panic or couldn't take the pressure anymore. Obviously, we've had some issues over the years, but I think cotton looks pretty good. And certainly I would like to be a buyer in here. But if you're a cotton farmer or cotton grower, I would certainly advise you to always be hedged anyways. One of the things I'm a big believer in, whether it be equities or whether it be farm products, there's different goals for both, because if you're hedging your crop, you're hedging just to get out. If you're hedging your equity portfolio, you're hedging to add on and compound it. So again, I think that from the first question, I think that we're bottoming, and I would love to be a buyer of corn, which I have been, and I'd be looking to add on to it. I think there's a much greater probability of seeing a rally than a continued sell-off. And of course, obviously trying to time that is really a fool's errand. But certainly, if you have the stomach to hold on to it, and you have the capital to hold on to it, I would certainly be a buyer in here.
Cotton was up yesterday. I'm looking at the Dees 24 up 99 points yesterday to 72.76. Do you feel like it's a good thing to reach out into the 2025 marketing year on cotton marketings right now? Should we be getting something done on next new crop?
Well, I think what you have to remember is that, other than some of the small changes of backwardation and contango that we go through in the commodity space, if you're going to protect or try to hedge, you have to use the near term, because when you go into the commodities, there's not enough liquidity going out into the new calendar year. So I think you have to hedge here and look for the movement, because the movements are typically similar. Whether prices are different, that doesn't really matter, because the price fluctuation will be very similar. So you'll get the same benefit of hedging, December cotton in 2024, even though you're trying to look into the 2025 marketing year.
Okay, very good. Let's kind of bring it back to the U.S. economy. No, let's go to the stock market. I want to do this first. Because in the intro, I teased this just a little bit, and I know which way that you have argued. There are those who say the stock market's just going to continue to climb, just keep piling in. Others are looking for as much as a 30, maybe a 40% downside correction in the stock market. Can you think of scenarios that might make, now they'd have to be exclusive, obviously, but that could make either case true?
Well, I listen, we are going up, and it certainly doesn't make a lot of sense that we continue to rise, but they have gone up, and they've gone up based on the thought that there's going to be rate cuts, which I don't believe they're going to be. I think that we're missing the much bigger picture. I think if you go back and you look at the 80s, okay, and you look at 87 to be exact, okay, markets were out of control going higher, and there was a lot of warning signs that continued to be ignored, and suddenly the markets got clobbered. You go back into the internet bubble of the 90s and into the early 2000s, and markets were going up like they weren't going to ever go down again. And we heard the same stories. And suddenly, out of nowhere, boom, they collapsed the NASDAQ plus the rest of the market. And of course, we saw what happened in 2008. Right now, it's factual. This is not my opinion. This is a fact. There are over 600 regional banks that are admitting to problems. Okay. And they have now started to create new derivatives on new derivatives. Okay. And so now we're seeing the same kind of situation we saw in 2008, which the real cause of the collapse was the creation of derivatives among derivatives. Okay. And when you start leveraging out all these derivatives, if they don't keep going up, eventually they collapse. And I think we're in the same situation now. I'm not going to tell you when I think the collapse is going to happen, because I have no idea. Okay, sure. That would be a fool's errand. But I do believe that we're looking for a 50 to 70% haircut. And it would be hard to believe that will happen before the election. Election years are typically 65% of the time they are higher. And again, other than 2008, I can't remember another election in my lifetime that was lower. So again, we could continue because, of course, you said it best yourself. The buyers keep coming. Okay. Yeah. Now they're not coming in full strength. Volumes have been very light. We haven't seen a dramatic amount of activity. Volatility continues to fall. But eventually what that really means is we are getting very complacent. And it is very easy to say, well, let me just put the money in the stock market because it's going up.
Right.
And of course, what happens eventually is everybody panics at the same time because they start to fall. It's no different than being on the short side of the market, Davis. As a pit trader, if everybody was long and we all felt the market was supposed to continue higher, suddenly the market stopped going higher. And of course, then the panic and the selling came in. Well, the same happens on the buy side. Everybody's long or everybody's short. Eventually, they stop going in that direction, and then you start to see the panic. And I would expect no different this time. The only issue is that we cannot time that. We cannot predict that. The economy is in very bad shape. And I would love for anybody to tell you or call you or tweet you, say that I'm wrong. Okay. But I say the economy is in very bad shape. I say that the middle class itself is in a recession. Okay. I say that we are allowing government to create too much regulation to help the bigger companies, with all the talking about the rich don't pay enough taxes, tax rate, all the BS that they put out there. In the meantime, they have regulated markets. They have regulated companies where there is never going to be a company that can compete with Google. There's never going to be another company that can compete with Meta. Why? Because the regulations have become so stringent that nobody has enough capital to be able to come in and be a competitor of theirs. So the economy itself is very bad. The jobs are very bad. We're creating, since 2021, 66% of jobs have gone to illegal immigrants. Only 33% have gone to Americans. They are not good jobs that they're creating. The JOLTS report, which many have heard of or may not have heard of, but it's the job openings report that they report once a month. Okay. That is a false report, because if you leave your ad in the paper or you leave your stuff with people to say that you're hiring, it shows that there is jobs. But we have seen an uptick in unemployment. The most amount of jobs that have been created over the last 4 years have been government jobs, which means that the taxpayer gets to pay the bill. Okay. Right. And of course, every jobs number, actually not every, but 18 out of the last 21 jobs numbers have been revised lower.
Well, that's a scary scenario, and not the kind of setup that we want to be talking about. The most recent U.S. retail sales was up a tenth of a point month over month in May. A lot of that went to increases were in sporting goods, hobby, musical instruments, and books, clothing. Gasoline station sales off, furniture store sales down. It's an interesting mix here. We need to get to talking about the markets after this. We've still got some questions from callers, but let's make sure and get these markets covered. I mean, it is AgriTalk after all. Markets or no. It's your pal Davis Michaelsen. AgriTalk. Knowledge is power. We're here to charge your batteries. AgriTalk. Welcome back to AgriTalk, everybody. We're wrapping up with Todd Bubba Horwitz from BubbaTrading.com. Just a little bit more time. I definitely want to, we're going to go straight here. Potential for hot and dry weather through key grain filling period here in the United States predicted. Todd, let's make it practical for the farmers listening in. It's been a hot start to the summer, but I mean, it's summer, so that's a thing. But how should people be be thinking, at least in your mind, about marketing corn and beans at this point?
Don't ask me. I've been wrong. I've been wrong. I mean, let's be honest. I didn't think cattle could go any higher. It continues to go higher. I thought hogs would go higher. They continue to go lower. I thought the grains would find a bottom and go higher. They continue to be under pressure. Look, the bottom line is for every marketing plan should include hedging, and hedging the proper way so that you never give up the potential upside of the market. I do think we're going to get a rally at some point here, whether it'll be a dead cat bounce and just a rally just because they've been selling them off. I mean, I bought wheat the other day. I bought more wheat the other day. And of course, they continue to destroy it and make it even cheaper. And of course, make my equity even less. But, look, I can't, this is where I run into a logic problem. It doesn't make sense We're using more food. We've got more people, and yet prices continue to go lower. Grocery prices continue to go higher. So somewhere there's a disconnect between the producer and the grocery store. But of course, like in every other event, the American citizen gets screwed. That's the bottom line, because the farmers are getting screwed on their end, and the consumer is getting screwed on their end. And who's taking and stealing all the money?
Mm-hmm. Mm-hmm. Yeah. Okay. All right. Yes. I'll leave that rhetorical. Let's talk interest rates just a little bit. We were talking to Vince Malanga the other day.
They're going higher. I don't care what they. I don't care what they tell you. I don't care what the Fed talks about, because originally they promised 5 or 6 rate cuts for this year. Now they're down to maybe 1, which is not even going to happen unless it's political or we are truly going into a recession. Okay, that they're going to admit to. We already know we're in a recession. First of all, this is kind of what we open with. There's not a free market. Why is the Federal Reserve involved in the stock market or any other market? Market and asset classes will price themselves through price discovery. So, based on the current numbers, based on what's going on in the economy, interest rates cannot go lower. They can only go higher or stay where they are. And it is my opinion that they will go higher unless it's a political move or there's a true recession, depression on the horizon.
See, and that's what I was sort of curious about. It was Dr. Vince Malanga the other day. Miracles can happen in an election year. The rest of it, we're waiting on a farm bill, dude. I'm sure you've heard about that, and it's just back and forth and back and forth. We can't get any traction. Same deal here with interest rates. Miracles can happen in election years. Do you foresee any potential miracles coming up ahead?
Well, I don't know if there will be, because there is one thing about the miracle that you might think might happen, but because I won't say his name, but the current president hung out the current chair to dry when they were waiting to reconfirm him, there may be a little bit of anger issues there. And there is the government has no real control over the Federal Reserve. They are an independent and a private organization. Okay, it was started by 4 criminals: Paul Warburg, the Rothschild family, Rockefeller, and Morgan. But other than that, they can't really. If Powell wants to cut, he can cut to help President Biden. If he doesn't want to cut, he cannot cut. But certainly, they're not going to do anything because of the economy. Because if it's as strong as they would like you to believe, right? And since more Americans are at full credit card limit debt and paying the minimum, I can't imagine that we have a strong economy. But if they want to continue to sell that lie, then they cannot cut rates.
I've got a story here that says globally 128,000 millionaires are expected to relocate in 2024. The U.S. is the top destination for these wealthy immigrants. Other favored locations include Japan, Singapore. The United Arab Emirates remains attractive for its zero income tax and luxury lifestyle. The wealthy apparently to continue emigrating to the United States despite what may be some struggles that we're facing right now.
Well, you still have some pretty good states, though. I mean, Texas, Las Vegas, Arizona. This tax-free state still. So, that's a big place to move. You see the exodus out of Illinois, the exodus out of New York, the exodus out of California. So, again, but certainly I have given some very serious thought myself to moving to Costa Rica.
Really?
Yeah.
What stopped you?
Well, I mean, I still have my mother I want to take care of. And when I go, if I leave the country, I ain't coming back. Okay. So, I got my mother who's 95, who I flew into Chicago because she was in the hospital. Now she's out and she's doing well. My son is still in Chicago, as you know. But other than that, I would never come back to the state of Illinois. And yesterday I was driving around and I saw a minimum of 500 people with signs at stoplights begging for money. Yeah. Now I have a question. Why don't they get a job? Okay. If there's so many jobs available that they keep telling me, why are they panhandling and not getting a job?
Yeah, that's a great question. Really good.
I got lots of good questions. You just don't let me ask.
I know you do. I got a few myself. We're not going to have time. Here, let me throw this at you. McDonald's artificial intelligence drive-through shut down in abject failure. They'd been testing those since 2021. I feel like this is a piece of good news, don't you, Bubba?
I think it's great news. I think it's sad that there's a rumor and a potential chance that McDonald's will pull out of California.
Yeah. That would be scary, but could you blame them?
No. I mean, Rubio.
I don't know how you make money there.
Already closed down. I mean, they're not. Listen, you cannot price business out of business. Okay. Again, you cannot force higher wages and things that don't work to put a company out of business. And let's face it, I don't know how much time we got, but like the Subway, the chain of Subway, if you're an owner of a Subway, you need to own multiple Subways to make a living. You can't make a living off of one. And if you force wages higher and you force the cost of product higher, it's going to be impossible for them to make a living at all. And that's what we're seeing, the destruction and globalism. And it's a tragedy. It's a great American tragedy at the moment.
Todd Bubba Horwitz, BubbaTrading.com. We love you, buddy. Thank you for spending so much time with us today.
Thanks, everybody. Have a great week. Enjoy it.
Come back tomorrow for Chip Flory Live.